Hey guys, welcome. It's just hit 12 o'clock, so we're just going to give it a minute or two, wait for a few more people to come online. Hopefully you can hear us. If you can, give us a thumbs up or leave a comment. For those of you that don't know, I'm Kat. I'm head of marketing here. This is Dean. He's our founder and CEO, and we're really looking forward to having a great discussion about sustainable investments over your lunch break. So yeah, if you've got any questions throughout the session, please feel free to post them as a comment. We can see that and we're happy to talk through anything that comes to mind. We've also got a whole heap of questions that were submitted from you guys, and we're really looking forward to going through that. So it'll be a little bit of an informal session and mostly a Q&A. So yeah, please do shout out if you have something that you would like to know. Otherwise, wherever you are in New Zealand, hope you're having a great Thursday. Had to check what day it was for a minute.
Short week. So short week that feels long. Definitely.
So yeah, really looking forward to running through this. I think just to kind of set the scene a little bit before we jump into some questions, having sustainable funds as part of our suite of investments has always been in the roadmap for Kernel. It's something that we feel is very important and our team is quite passionate about. So we're really proud to have launched these 3 new funds as, I guess, the starting basis point of our sustainable investment options. Obviously here to talk through what the different funds are and how they came to be, but also give people a bit of an understanding and further explanation of sustainability and ESG, because there's a lot of jargon that's thrown around in the world of sustainable investing. A lot of terms interchanged with, ethical investing and various different things. And it can be helpful, I guess, to start with that at the starting point. So with that in mind, Dean's going to run us through basically just the start of what is sustainability and ESG, because that's a bit of jargon in itself, and how should investors be thinking about those topics?
Yeah, so as Kat highlighted, there are a range of terms, and I think even within the industry ourselves, not just from as investors, but as professionals in the industry, there's a lot of mixed use of the terminology, and really because there's no kind of global standard. So it does range. You'll hear things like socially responsible investments, otherwise known as SRI, ESG, which is kind of around environmental, social, and governance, sustainable, and obviously ethical. So there are a range of terms that people use. They do all mean different things. And I guess what we are talking about, our kind of broad range of products, we would categorize under sustainable. One of them is also defined as ESG. So sustainable investment strategies have been around for quite a while. They started to appear in the actually sort of 60s and 70s, around sort of the time of we obviously had apartheid and other sort of issues, and the Vietnam War even triggered it, and that sort of started to see the rise of some sustainable investments. Now, for a long period of time, most things that have been labeled as sustainable, what they simply do is just not invest into certain sectors or companies. So that's kind of been the norm for a lot of sustainable products. So we're not going to invest in guns. We're not going to invest in tobacco. What we've seen recently is kind of the rise of ESG investments, and that's what the new NZ index does actually. And they're actually relatively new. So Standard & Poor's, the biggest index provider in the world, who we obviously have partnered with for a range of our products, their ESG indices, in terms of this new generation, are only really been around since 2019. Australia only got their first ESG index last year. And by ESG, not only do they do exclusions, but every company is basically given a score on environmental, social, and governance elements. And within the index, companies that have a higher score, a positive score, will get upweighted, and those that are negatively downweighted. So not only do you have kind of the base level of exclusions that you would see with sort of sustainability indices or products, you also get this sort of tilting more towards companies that are doing good and away from companies that may be doing less good on these sort of scoring metrics.
Yeah, I think that's really good to highlight. And I guess one question that came to mind for me as you were explaining that was, well, although sustainable investing as a theme has been around for quite a while, S&P have only really, been able to launch a whole heap of new indices in this space since 2019. Why is that? Is there always been a bit of a challenge, I guess, with the data or the access? How has that kind of worked? And then I guess that kind of flows into explaining, well, how do they select the criteria?
So for a long period of time, it's quite easy to define a company to within a sector. That's an easy process to go. You're an arms company, you produce guns, and we're not going to invest in that. To kind of go to this next phase where you're also adding in these tilting, the biggest piece that is being required is the data. How do you go and measure all of these various elements? So how do you measure a company's water use, their carbon emissions, their governance practices,
how they treat their staff,
all of those things feed into it. From cybersecurity, there are actually hundreds of elements that a company would be measured on that are important to feeding into a score. And so obviously, as you can imagine, there are tens of thousands of listed companies around the world, or even just in New Zealand. How do you start that process with just top 50 companies? And so that's been the biggest piece missing. We're now at that point where the data sets are available. We can have confidence in the data in terms of its robustness to be able to do these things. So if we think about the partners that we use, one of the big drivers or things that feed into that is this corporate sustainability assessment, and it's one of the biggest surveys globally, and that basically builds this big database that assesses each of these companies on these various factors. What's also probably interesting to note as well is if you're a technology company, the things that are important to kind of your ESG score and what triggers of whether you're kind of acting responsibly or not are different to, say, a company that's operating in the healthcare. So the scores are actually calculated within each sector as well. So you're being assessed against your peers. That's the key here. So within the healthcare sector, how do you kind of sit across those factors versus the peers within your sector? So you're not penalized for being in healthcare versus a technology company where you've got different kind of drivers.
Okay. And I guess if we wanted to, we will talk about the funds specifically in a moment, but if we wanted to dig deep into understanding how the companies inside each of these three funds are actually assessed, like what's the easiest way to do that? Because it sounds like there's a heck of a lot of data that goes into this. So it can be quite a challenging process to maybe sort through that. Is there an easy way just for an investor, if they're interested, to get into the detail, like where they should go?
Not quite yet, but it's stuff that we want to do more reporting on. And so what you'll see from us over time is increasing levels of reporting around these funds that goes beyond just the general reporting that you would get from any other fund around performance or holdings. So most companies in the ESG scoring system will end up with a number basically between 0 and 100, 100 being kind of the best. That's not all fully publicly available yet, but that information is starting to be available. And obviously there are a range of things that feed into each of those scores. So these are very big databases. So what we will look to do over time and what is happening globally is some of this information is becoming more digestible for everyday investors to go and find and be able to see different company scores. There's some really fascinating stuff happening. S&P Global and their market intelligence platform have actually now got this forecasting tool that will show how a company is tracking towards the Paris Climate Accord and whether they are on track to their practices as a business are on track to meeting the 1.5 degree warming target. And if not, it'll actually signal where they're on track to, whether they're going actually at current structure, they're looking towards a 5 degree world. So there's some really amazing data sets out there that are becoming more accessible and open for investors to go and use.
Cool. Okay, so there's definitely a bit of, I guess, ability through what S&P have been producing already to dig into some of the individual companies. And then at a fund level, like any of our funds, we always link through from the fund page to what's called the index methodology. So most of you have probably heard of this before, but it's the rule set that an index fund follows, and it can be quite detailed. So I think, fair warning to people that if you click on the methodology details, you might end up with a 30-page document. That is because, as Dean's explained, there's a lot of data, there's a lot of factors that come into play here.
A real simple one, like obviously, we tend to focus a lot on the E within ESG, and that's obviously top of mind for most people at the moment is climate change. And so a big driver of that is carbon emissions. But there are also the S and G elements that are quite important. Things like carbon actually are already being reported. So if you link through to the S&P webpage for each of the indices, most of them now actually have a carbon metric. It'll basically say how many tons of carbon are produced for every dollar invested or every dollar of revenue the company makes as well. And so at an index level, you can see if an index is actually tends to be more carbon efficient or not versus others in terms of how they weight the companies.
Yeah, cool. So I guess to the more exciting discussion, like what are the new funds? What are they? And how did we land on those three as our starting point?
Yeah, so I guess as Kat mentioned, from the very beginning, we wanted to build out a range of products. It's been actually waiting on the data sets to be able to do this because we launched in 2019. That was actually the same year that S&P launched the first S&P 500 ESG index. So it wasn't physically available at that time. With all of our funds, we've tried to build out a range that people can use cohesively together, I guess, so that you don't have overlap, that you can build a portfolio with them. And so we've been trying to build out these little, I guess, components and building blocks. And that's naturally where things like the global property came in, and that sits alongside our global infrastructure. The clean energy we felt was a good thematic to kind of round out our thematic range for those who really want to kind of go, I guess, deep green, you could say. And then obviously we wanted a New Zealand equity kind of exposure, and we had to develop and obviously it's had to develop a new index for that because it just hasn't existed to this point. So, so the three funds, obviously global clean energy, global green property, and a New Zealand 50 fund that's actually got an ESG tilting overlay to it.
Yeah, awesome. Cool. So, I mean, we've obviously talked about, S&P is our index provider, and there's so many different data sets and scorings. One of the good questions that came through from someone was ESG ratings can vary a lot based on who exactly is doing the scoring. We hear about different companies like Trucost and Sustainalytics that have different assessments for different things. How did we filter through, or how does S&P filter through, and who do they use, and kind of why? Like, is there a golden standard in this yet?
There are a huge range of data points that go into this, and it's I guess where to start. So S&P are the ones that calculate the index, and they will calculate these scores for a company, and the methodology that it uses takes that to weight a company within the index. But how do you get to that ESG score? The feeders into that ESG score through S&P and the company's inclusion are things like Sustainalytics. Another one is called Trucost. Trucost has actually been acquired by S&P, but they are one of the biggest calculators of carbon emissions per company globally. I think they cover nearly 15,000 companies. And it's quite a fascinating business as well. So they use company reported data, so surveys with company financial statements. They also pull in a database called the Carbon Disclosure Project, which is one of the largest carbon databases globally. So you can see there's this big intertwining of data sets that pull together so that we have a really accurate model of what these companies are actually doing. And it's not just reliant on their own reported information. The key here is you want to be able to go, actually, you've told us this, but does that sound right compared to what maybe your peers are doing or what we're seeing from other information? So there's all these databases that come together, and that calculates the ESG scoring. You can have about 7,000 data points that come together to actually get up to one score of 0 to 100. So it's pretty comprehensive.
Okay, awesome. And I mean, at a bit more of a practical level, for those that do want to get into the details of, what companies are in the funds and find out some more information on that, we do have at the moment, usually all holdings within the funds on our website. We don't have them yet listed for the NZ50 ESG, which we'll talk to in a little bit. But for the moment, they are there and available for global green property and the S&P global clean energy. So for those that, there's a lot of great different names in there that, create some fun Googling and I guess a little bit of learning on various different companies, particularly in the clean energy space. So they are fully available if you want to find out what companies are there. But with the NZ50, I know, Dean, we had a couple of questions on, most of our investors would be familiar with the fact that we have an NZ20 index, and that's been one of our core funds that Kernel has offered since day one. This is slightly different in that it's an NZ50 ESG tilted fund. can you kind of talk us through a little bit about why we've opted for the 50 here, not the 20, and when there'll be a bit more details available on this fund?
Yeah, so the new index that we're tracking is an NZX 50 index. As some of you may be familiar, there are kind of two types of 50 index. One's the portfolio, which has the 5% stock cap, and then the normal. So this is using the 50 portfolio index as the base. So that's kind of the starting point. And then overlaid to that universe is the ESG criteria. There are also a couple of exclusions, so everything's really transparent. So the exclusion being around scarcity, gambling is excluded. And there are general exclusions as well that don't necessarily apply to New Zealand, but are part of the index methodology. So tobacco, nuclear armaments, things that aren't actually relevant to the market, but they are part of the methodology. Yep. And so why the 50? So I talked a bit about where ESG indices have gone. So they've gone from just these simple exclusions to doing this upweighting and downweighting of companies based on an ESG score within a sector. Now that's kind of the new generation of ESG methodologies globally. Mm-hmm. So to be able to do that, we actually had to have a big enough pool of companies. With the NZ20, you may have a sector that's only got one company in it, so you can't upweight or downweight. The key here as well with this new 50 index is that if there is 20% exposure to IT in the normal 50 index, there's still going to be 20% exposure to IT within this new index. So you're getting the same kind of structure. Yep. It's just the company weightings within each sector is going to be outweighed and down. So the reason why we've used the 50 is to be able to have that kind of big enough size and diversity of companies to be able to do some of that upweighting and downweighting.
Yeah. Okay, cool. So I guess, if you're looking at like the 20 versus the 50, they are still very different investment options and funds.
Yeah, we've written a lot about NZ20, like I think why we think it's a great index for New Zealand. And we've kind of now got a couple of different choices for people. Some people may want to use the 50, actually nothing to do because it's an ESG, because they just want a really, well-priced NZ50 exposure.
Yep.
With the 20, people may want to use that because they just want to invest in the largest companies. As you'll know, we also launched our small and mid-cap index. Now, that was the first index that also invests outside of the 50. People can use the 50, or they could actually use the 20 and the small and mid-cap together, and that actually gives you a bigger range of companies. So investors now have a bit of flexibility about what's important to them, how do they want to construct their portfolio. And so you've got a range of options now.
Okay, cool. And I think, on the portfolio construction thing, it's something that is challenging for everyone. It is quite confusing at times. And for those that have listened to any of our webinars before or read our blogs, we talk a lot about core satellite investing and reference our core funds being the NZ20 and the Global 100, and then satellite funds being a smaller allocation to perhaps a theme or a sector or an area of interest to sort of give your portfolio a tilt towards that. So the thematic innovation funds are a great example of, say, a satellite investment. When you're thinking about ESG as an investor, do you have some views on how ESG funds or sustainable funds would fit into a core satellite investment strategy?
Yeah, so I think there's been a real change around how people think about ESG and sustainability. There was a long period of time, there was this perception, I'm going to have to sacrifice performance to be able to get sort of a sustainable ESG strategy that aligns with kind of my values. I think that's kind of been debunked now. There's been a lot of surveys showing that actually that's not the case. Yep. And in fact, actually, there has been probably an increasing number of people who are, even if it's not their values, investing in ESG and sustainable funds because they're taking a strategic view that they think those strategies may actually outperform going forward.
Well, sustainable businesses, right, are almost like designed for longer term growth because they're better weathered to what's happening in the future. Well, that's I think the thing. So we're seeing not only consumer demand for the products and services by companies that are considering these things, we're also seeing regulatory change. So companies that are considering and adapting to that change are potentially going to be better suited, and companies that are actually thinking about their place in the world from a sustainable and ESG point of view tend to be thinking long-term strategically. So they've got quite a big long-term vision. And again, that's where people are looking, going, actually, maybe that's a good mindset that we want to be investing in.
So people can obviously have a whole portfolio that is aligned to ESG or sustainability, or they may just want to use components because it's something that is important to them. They maybe want to just add in, to your point, a satellite exposure to clean energy. It comes down to a values thing, and I think that's the key here is we operate as ourselves how we want to operate as a good corporate citizen. We produce the most innovative range of products that then it's over to you as an investor to decide what's important to you, how do you want to invest, and make a start from there.
Yeah, cool. So I think, on the sort of the satellite options and some of the thematic discussions, investors that are familiar with, our other two innovation funds would probably know that we had, partnered with S&P and Kensho to really dive into the technology behind that for both of those funds. One question that we did get was, Kensho also do a clean energy index, but for our clean energy fund, we're just tracking, I guess, a more kind of standard S&P clean energy index. Is there a reason behind that?
Yeah, we did quite a bit of work looking, same when we did the other thematics. Everything we build has actually quite a lot of discussion internally about, is this the right index? Is this the best methodology? I guess that's our responsibility to take that grunt work and do all the legwork. We looked at significantly in quite a few different kind of global clean energy styled indices are available, not only from S&P and Kensho, but other providers as well. The Kensho index actually, there are some constituents or some companies within there that are already in our moonshots, so you kind of can get a government exposure to that. The thing with the clean energy though that we found was this is very much, rather than say a disruptive technology piece or say electric vehicles, it's very much a global story. It's a very global product set. And if you think about, the companies that are actually in this global index, it includes a couple of New Zealand constituents. It includes a giant global, wind turbine manufacturers. So it's a very diverse sector in terms of the companies that are really innovating and driving change in this are spread globally. And so that's why we wanted to go towards the S&P index, not the Kensho, because the Kensho index actually only invests into companies that are accessible via US listed stock exchange. And so we wanted something that was more global than that.
Okay, awesome. Now, I think, one of the questions that's a very fair one and something that we've considered a lot internally before launching sustainable funds is naturally people want to know about Kernel's business and, what we do internally at a corporate level to basically have sustainable practices and the types of things that we care about. So do you want to kind of, I guess, chat us through some of that? Because it's kind of interesting to know, what we're at and how we approach it as a business.
I guess there are things that we've been doing from day one that, whether we talk about them or not, have been of importance to us, not only as a team, but as a business, around how we act as a social citizen, as a corporate citizen, I guess, in our place in the world. From the very get-go, we built an entirely digital business, and that was done not only for the strategic point of view, but it also meant we can minimize waste. So we have no paper in the office, those sort of elements. Again, then focusing on the thing that is obviously top of mind for a lot of people at the moment, that's carbon and the environmental elements. So we try and minimize our waste generally. Like, obviously we do have no paper, very limited waste, and we try and minimize domestic travel, particularly where we can. That tends to be the largest contributor to our kind of carbon footprint. And then anything that we do have, that remainder that we can't avoid, we actually then have offset. So we have we will purchase credits to offset that through Toitu, and we do that in every financial year. And so we'll do that going forward as well. We did that for the last year, and then this year we'll also be going through a full certification process as well. And I guess broadly, again, trying to focus on, we do care about the other elements. So as a team as well, we're a accredited living wage employer. Very much, we talk a lot about the fact that financial well-being and security is really important to our investors, and that's what we want to help them there. It's also important to our staff as well. So there are a number of things that we try and do as a business across the board that I think tie into this, that we've done from day one.
Yeah, absolutely. And I think it's, it's one of those things that is almost an area of constant improvement and involvement, as a lot of businesses, particularly, larger companies, listed companies, other fund managers, and the financial services sector look to really implement, a number of different practices in the next couple of years. We did have one question come through from Daniel, which we'll talk about now, because Dean's touched on a little bit about returns and I guess debunking the myth that sustainable funds have meant you sacrifice some form of return, and the fact that when we are launching a fund that's attached to a new index, like we are with the NZ50 ESG, there's what's called back testing of data to make sure that we can not only provide an indication of past performance, but also gives us some certainty around the fact that, confidence in the strategy and the index. Exactly. So I guess, do you kind of want to make some comments around, say, performance and back testing issues, and, can we go back as far as, say, the data we've got for the 20, and how does that work?
Yeah, so the two global ones, you can already go and look at the returns and information on our website. Again, from Kat, I think a key thing there is not only do we have sort of general performance and some of the range of returns and things that you'd expect to see, if you click on the link that will take you to the S&P page, so it will take you to, say, the S&P Global Clean Energy Index page. From that, rather than necessarily having to download the full methodology, there's actually a little fact sheet, and it's typically a 2 or 3 page document, and that will summarize kind of the key points around what the index does. And it gives you a lot more than just returns. It'll give you kind of the volatility and calendar year returns as well, going back typically 10 years. So there's quite a lot of information there. So while the fund may be new, you can kind of get a really good sense about what this thing has been doing, would have been doing previously. For the New Zealand one, I've seen the information. It's not yet publicly available. So this is the very first index for New Zealand. It's been a long time in the making, actually, behind the scenes. We do have all the back testing, and there will be 5 years of back testing information that goes up that shows performance against the general 50. And look, I would say that we're pretty happy with how that sort of looked and what it's done compared to that. And so we will expect to see, I think the index officially will go live later this month. And obviously the first trade date for that new NZ50 fund will be the 5th of July. So before that, you'll have full information around the sort of historical performance and characteristics of the index, so you can make a well-informed decision as to whether that's the right thing for you.
Yeah, and I think in addition to that, at that point, we'll have all the information about holdings and, current weightings in the fund. There'll be the S&P page available so that you can dig into some of that methodology if that's what you're interested in. So it's a little bit of a waiting game for now until we have that. But as Dean mentioned, it is already available for clean energy and green property, and it is coming very soon for NZ. Now, Seb here has asked a question in terms of, going back to that criteria and how the companies are decided on being included in the index, and whether they mainly rely on ESG ratings, and how do we address, and I guess when I say we, it will be more S&P, address the divergence of ESG scores from different providers.
So there are 2 or 3 kind of key global providers within ESG scoring space. A lot of them do tend to use have a crossover in the databases they use, though. So it will just be slight divergences in, say, their methodology of how they calculate. And I would say as well, there is less ESG scoring within the clean energy. That's about companies that are operating within a certain sector and framework. Same a little bit for the property space. The property actually uses a scoring from GRESB, GRESB, and they're kind of a global expert around real assets being property and infrastructure. And so that's part of that scoring there. Again, if you think about property, the items that are important there are different, say, to a technology company. There's things like water usage, and are they, looking to lower power usage, those sort of things. For the New Zealand one, yes, there is ESG scoring there. That's calculated by S&P using those various databases. I guess, how do they address differences? I think it really tends to be kind of on the fringes, but we have seen cases previously where a company may be defined to be, it tends to be more global, and often it will tend to be around things like they'll have a small part of their business that may, if it's a global conglomerate and they've got a small part of their business that's operating in a sector that, one, ESG scoring calculation will assess differently to say another. So you tend to get that around the fringes, and I think that's going to always be a bit of the case. But broadly as a whole, they tend to be fairly aligned in terms of the outcome, particularly given, as mentioned, there's a lot of crossover in the underlying data sets that each of these ESG scoring providers actually use. So a lot of them use the Carbon Disclosure Project data sets and these sort of independent global data sources, as well as direct reported information.
Yeah, absolutely. And I think, at the end of the day, any index provider like S&P want to get companies, they want it to be easy to report on, right? Because ultimately they want the data so that we can have really wholesome indices in this space, and they are trying to make it easy. So I think, as we kind of progress here, there is becoming almost less of a divergence because, you want to encourage good reporting, right?
Yeah, and there is a lot of regulatory change on this stuff actually happening in New Zealand starting next year and globally. If you search the acronym TCFD, that's quite a big regulatory change for basically all listed companies, fund managers, insurance companies. So the data sets and information is just growing year on year now to have really accurate information that we can have confidence in. Yeah.
Awesome. So if anyone that's online has any other questions for us, please feel free to post them in the comments. We can see them and we're happy to address anything. But I'll give you guys a couple of minutes in case there is something that pops to mind, either about the funds or sustainability or ESG in general. I guess, sort of the practical stuff in terms of when are the funds available and how can I invest in them and all that sort of information. We have that available online now. So like we touched on, we've got, I guess, what you'd say the highlight information available for NZ50 ESG. But for the other two funds, we've got the full details, including, links to S&P, the methodology, the holdings in the fund, and all sorts of information around risk and the returns, of course. So that is available there now. The first trade date for green property and global clean energy is next week. Yes, Wednesday. Next Wednesday. So that's coming up very soon. So for anyone that's investing with us now, you can already put pre-orders into that fund for next Wednesday. And as Dean mentioned, for NZ50, it is the 5th of July. So we anticipate the website will be updated with more details in the next couple of weeks, obviously before the 5th of July. And then, first trade date will be the 5th. So, any kind of closing comments from you around sustainability, things to think of? We've got, obviously, we do a lot of blogs, but we know that this is almost an area that can sometimes be a little bit complicated and a bit of a minefield with the amount of data and, different jargon that's thrown around. So we're very keen to write on and help provide information that's actually helpful.
So I think you'll see a bit more from us as well. We've obviously written a couple of blogs. We've also been drafting an ESG policy, so you can understand a bit more about our processes and what we kind of assess and how we work through the different funds. And I guess generally just reach out with any questions that you have. It's something that we've obviously spent behind the scenes
almost 2 years.
A long period of time really diving into all of the details around how do these things work, what's happening globally. We're actually holding a number of sort of industry level events to try and drive change here with corporate listed issuers, listed companies and boards. So we're quite active in this space in terms of what we're doing. So you may not always see it, but do reach out to us if you've got any questions, because it's something that we're talking a lot about. And we want to basically build our investors the best sort of products that they can for the market today.
Cool. And I think, in answer to Seb's question that's just come through around any more sustainable funds, as we mentioned at the start, this is definitely the start of, I guess, our sustainability range.
I think there are still things that we want to do over time. I think as we've operated from the very beginning, we love your feedback, and genuinely the suggestions, recommendations that we get from all of our investors do drive the things that we build and deliver. So if you've got any ideas or requests, do send them through. We do acknowledge and take notice of them, be it for new funds or features on the dashboard. I think, Ryan was pretty excited to roll out dark mode, I think, within a few days of having that request come through once we launched our new platform. So we will actually genuinely go and take any requests and feedback that you have seriously, and the team consider it and kind of helps prioritize what we're doing.
Yeah, absolutely. So I think, this is definitely a great starting point for us. Like we have in the past, we obviously like to launch funds when we have them available, that it's the starting point, and then build things out as we see fit to either help meet investors' needs or, meet a gap in the market if there's something that's hard to access or traditionally, hasn't really been available in the New Zealand marketplace. So really keen, very excited that, the 50 in particular is a first. For New Zealand, so that's really cool.
Pretty excited by the fact that we've been able to drive the change here locally. Our smaller mid cap being the first index fund that actually missed outside the 50, that was a good peg in the ground from when we launched, and now to be able to do the similar sort of thing with the very first S&P ESG index, I think that's again stuff that we're excited to be driving the change for. And broadly, everything we're about is trying to build the best, most innovative product sets available for you as investors, so that you can construct portfolios and investment strategy that's really forward-looking and going to get you towards your long-term goals.
Awesome. So kind of to wrap up, guys, I guess some things that are kind of coming up from us, and you'll probably see in the next week or so, a couple of weeks. Obviously, we'll have some more information soon on the NZ50 ESG. I am actually sitting down with the global head of ESG indices from S&P tomorrow, like some of you may have seen I did with John from Kensho, to pick his brain on basically, some of these more detailed questions around how does their team take all the data and get, really sound ESG indices. So there'll be some information available on that, probably some short snippets and just some updates to hear, I guess, more from the horse's mouth how the team best do that. All three funds are available to place pre-orders into now. First trading date for two of them is next week, and the first trading date for NZ50 is the 5th of July. And in quick answer to your question, said yes, our NZ50 ESG Tilted is 100% passive. It is an index fund. So, cool.
Thank you, guys. Thanks for joining in. Hopefully you've been able to finish your lunch while listening to us. Time for us to go and grab a bite to eat and then carry on with the day.
If you've got any questions, honestly, get in touch. Team's always on chat on the website. Love to hear if there's anything you want to know more about sustainable funds. And we'll be in touch soon.
Cheers.
Bye.